Hey TikTok, hey TikTok, hey TikTok. Only got about a good 15 minutes. So I'm just jumping on really quick. Those who, I guess they got a replay on here if you catch the replay. Hang out with me for a few minutes, but I only got about 15 minutes before I got to get out of here. But I wanted to get on and I wanted to talk about some things pertaining to how to pay yourself. How to pay yourself as an LLC. Listen, guys, if you have been following me, I have been dropping guys information about taxes, about structuring your business correctly, and about funding and how to make sure you get access to working capital. And so I wanted to jump on. I'm kind of feeling good. I'm out of the pneumonia flu situation that I have been dealing with the past few weeks. And so I just wanted to jump on. Listen, guys, this coming Tuesday, 6 p.m. Central Standard Time. Listen, we are doing a absolutely live webinar, and we're going to be talking about all things legal, how to properly structure your business. We're going to be talking about tax saving strategies, and we're going to talk about how to properly set up your business and your personal profile so you can get access to this working capital. And so I just wanted to jump on. Like I said, I got about 15 minutes. And I had a client come to me and we were doing a review of their business and how their business actually is structured, right? And thanks for guys for jumping on. Thank you guys for jumping on. Like I said, it's been a minute. I've been sick, so I'm doing good. Thankful and grateful to God that I'm out of the storm of the flu and the pneumonia and all of that thing, because that had your girl down for a couple of weeks. I was down for the count. But I'm back. But I wanted to jump on as I see you guys coming on and jumping on with me. I want you guys to make sure that you click the link in my bio, because I want you guys to join our free webinar. We're going to be talking about all things legal when it comes to structuring your business and your entity. We're going to be talking about tax saving strategies. And then we're going to be breaking down what it looks like your personal and your business profile needs to look like so you can get access to high limit funding opportunities, right? But I wanted to jump on tonight because I had a client and they came in and they had a single member LLC, but yet they was running payroll. And I couldn't figure out how they was actually running payroll out of an LLC. And for you guys that don't know, an LLC, a single member LLC, is basically a pass-through entity, meaning that the funds and the gross revenue that you generate from your business in a single member LLC, it passed through onto what is called a Schedule C, which passed through onto your personal return, which is taxed on that gross revenue, that 15.3% that we talk about. So I had a client that came in and they were running payroll. And I'm like, how are you running payroll on a single member LLC? Well, they said someone told them that this is how they can structure and set up their business. So I thought about it. I wanted to come on and talk about that, because when you're a single member LLC, again, I said that is a pass-through entity. You're being taxed on that remaining generated revenue or that net income, even after your expenses, whether you pay yourself at an owner's withdrawal, which is the proper way to doing it, not an actual payroll. Like, you're not actually running a W-2, because those funds are pass-through funds. But apparently whoever the client was dealing with did not know that. Hey guys, thanks for rocking with me. Thanks for hanging in. I hope you guys get some information out of what I'm giving you. But I wanted to talk about how you are to pay yourself when you have an entity, whether it be an S Corp or whether it be a pass-through entity. You can pay yourself through a pass-through entity, but it's a way to do that. And you can pay yourself. You can invest funds into your business, but there's a way you have to properly do that as well. And if you're not doing these things the legal way, this puts you in the line of fire of being audited. Yes, if you are a pass-through entity, an LLC, you are at a higher scrutiny of being audit, because you're on an LLC and you're being taxed. You're filing a Schedule C as a single member LLC, a pass-through entity, right? And that gives a lot of scrutiny, especially if you're generating $250,000 or less in revenue as a business and you're operating as a business. You're in the limelight for being audited. So we want to make sure that the things that was once looked over, becomes more so of not being looked over by doing it the right way. So if you are a pass-through entity, meaning you just have an LLC, you're a single member LLC, you're a pass-through entity where you file a personal tax return and your business activity is on a Schedule C, you can pay yourself. How you pay yourself legally is what's called a owner's withdrawal. Now, is there a certain amount you have to do or not? No, because it's an owner's withdrawal, meaning if you generated $100,000 and you withdrew $100,000 out of that business and you did not make any revenue, or you don't show on your Schedule C no revenue, whatever that the bottom line is, if it's net income or not, that it may or may not be taxed. I hope that makes sense what I'm saying. Drop some comments and let me know that you guys are getting what I'm saying. If you make $100,000, you do an owner's withdrawal of $50,000, let's say $50,000. $50,000, that revenue, that 50,000 of that net income after the expenses from that 50,000 can still be taxed because it's generated pass-through revenue. You're still taxed on that by 15.3%. Now, the money that you withdrew out of it, that's just money you withdrew out of it. Again, we're talking about a single member LLC, a pass-through entity, right? And we're talking about how to pay yourself out of a pass-through entity. There's no restricted way of paying yourself because you're simply taking the money that is generated in your business and you're withdrawing it, whether you give yourself a check out of your business account or whether you do a transfer. It's considered owner's withdrawal. That's it. You're still going to be taxed on whatever that net income is that left over in that business account or in the operating of that business. You're still going to be taxed on that because it is a single member LLC and is a pass-through entity, right? Meaning there's no tax implications. You're being taxed on whatever their remaining income is. So when we're talking about paying yourself, there's no payroll generated company that you need to go through. There's no W-2 that you need to account for yourself. There's no 25% out and you're not paying taxes against that because you're going to pay taxes on the net income, whatever you left in that account as operating revenue for that business. Right? I hope you're getting what I'm saying. I hope that makes sense. Now, let's talk about if you get taxed as an S Corp. Remember, guys, an S Corp, and I want to make sure I keep up with my time. Remember, guys, an S Corp is a tax election. It's not an entity. Now, if you are generating $45,000 to $50,000 in net income in your LLC, then you want to begin to tax yourself. You want to be elected as an S Corp so you can now do what is called payroll. You can set up payroll for yourself against your business. It still can be LLC structure-wise, but as far as being taxed for tax implications, if you be elected as an S Corp, you can do what is called payroll. This is where you payroll yourself. This is where you put yourself on payroll and you pay payroll taxes. And this is where you generate a W-2 to yourself as the owner. You're being taxed under an LLC, an S Corp. Okay? Now, it's a couple of ways you can do that. Because we often we advise our clients between 18 to 25% take out as payroll, paying yourself from your gross revenue, right? We talk about that's the number that you want to be at when it comes to paying yourself when you're being taxed as an S Corp, right? Now, when you're doing that, there's a couple of ways you can do that to get up to that percentage. Now, you can do in the form of payroll where you're paying taxes, or let's not get it mistaken because we have clients get this misconstrued too. They believe without paying payroll, meaning setting yourself up on payroll where you're getting a W-2, where and a lot of the amount is coming out and paying you in the form of a W-2. A lot of times people get this mixed up with owner's withdrawal or owner's distribution when it comes to an S Corp, being elected as an S Corp. A owner's distribution is not the same as payroll. A owner's distribution, let me say that again. An owner's distribution is not the same as a payroll. Okay, we want to make sure we have a clear understanding on that, because guys, this is what is causing a lot of businesses to be audited because of these misinterpreted and things that are being missed when they're filing their taxes, right? And so I want to make sure you guys are not in that number. I want to make sure that you guys are good when you go to file your taxes with your CPA or your accounting and you talk about these things with them, right? Now, again, we're talking about how to pay yourself as an owner. We talked about an LLC and a pass-through entity and how you're able to pay yourself that way. Now, again, when you are an S Corp, the generated revenue or the net income after you ran your payroll and paid yourself, you've allocated the amount that you're going to do for payroll, you've paid taxes on that payroll, which is called payroll taxes, and the remaining gross or the remaining net income that you have in your S Corp, that goes on the form of a K1. That amount that passed through to your personal return in the form of a K1, that amount generated revenue can become taxable income, included in your total taxable income. Let me say it that way, okay? So again, didn't want to be on here long because I have to get out of here, but I wanted to make sure I jumped on and just kind of talk about that, because I had a client that came in and they a single member LLC and they're showing me payroll. And I'm like, wait a minute, who advised you on this and who told you to set this up, right? You don't have to, you don't pay yourself in the form of payroll in a single member LLC. That is a pass-through entity, okay? And what do I mean by pass-through entity? Whatever income or not is generated from that business, it passed through onto your personal tax return. It is included into your taxable income. It is being taxed. It is being taxed. Now again, if you're at the place, you're at that sweet spot, that 45,000 to 50,000, and you know your business is growing and scaling and going into the six figures or higher, you definitely need to be tax elected as an S Corp so you can take the benefits. Now let me give you guys a hack. Not a hack. Let me give you a gem. Let me drop some on you. I often advise our clients to move away from a single member LLC and into a partnership. This removes the tax partnership. This removes the tax implications of a pass-through entity on your business, because now you're being taxed as a partner. Your entity is set up as a partnership and not a single member LLC, and it's not on a form of a Schedule C, but it has a standalone business tax return. And now those income and those expenses can be allocated on a business tax return, and it pulls you away from being double taxed on a Schedule C. Just something I wanted to drop on you guys. I'm about to get out of here because, like I said, I just wanted to jump on here and talk about how to pay yourself as an LLC. Now, I need you guys to stay tuned. I need you to click whatever you need to click to get those notifications, because I'm going to come back on here and we're going to talk about how to invest into your business, how to take your personal income and invest it into your business the legal way so that income is not taxed. Because oftentimes people use their business account and they use personal finances to contribute into their business, and because their tax preparer does not know that they're being taxed on that, and it's being included as personal revenue, and that is not the proper way to operate your business. So we're going to talk about how to make sure that is legally accounted for and legally calculated with the type of documents that you need for you to be able to show how that income is supposed to be accounted for and calculated for. So I need you to hit those notifications. So before I get out of here, again, this coming Tuesday, we're doing an absolutely free live webinar talking about how to properly legally structure your business. We're going to be talking about proven tax strategies that you guys can implement right now before December 31st, and how you can put those into this business for 2024 so you can be able to save taxes this coming tax season. And then we're going to be talking about how to make sure that your personal and your business profile is structured and set up right, so not only you can get the high limit and business funding opportunities that's available to you, but how you can do so instantly and not have to either get denied or delayed because of little things that often get missed in the properly structuring your business that causes ones to get denied or delayed when it comes to business funding. So we're going to be dropping those gems. We're going to be talking about it. I need you to get in the room. It's absolutely free. We've been doing this week to week the past few weeks, and we have results where clients have come in. They have set up their business right. They have did what they were supposed to do, did the necessary work, and they've already get access to working capital, and they're already making moves and doing what it is that they need to do right now before the end of the year. And I don't want you to miss that. So I need you to get in the room this coming Tuesday, 6 p.m. Central Standard Time. The link is in my bio. You guys can go ahead and go from there and register and save your seat. Listen, DM me if you got any questions about what we talked about today about paying yourself as a single member LLC. And yeah, I'm just here to help you guys. I want to see you guys win. I want to see your business grow and scale to the next place or where you're trying to take it to. And I want to see you guys maximize in tax savings and minimize that tax liability. All right? Until next time.